Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium video, so I hope you guys enjoy the content. Today we're going to be talking about the Bitcoin dominance. So this is a topic that I've touched on before on the public channel, but I wanted to give you guys a few charts that I haven't really spoken about on the public channel, or I haven't plotted it this way, to help you guys identify the various phases of the market cycle. And this was also a suggestion by someone fairly recently that I could take a deeper dive into the Bitcoin dominance. So let's go ahead and jump in. But I've noticed that when you're watching the video, it's kind of hard to look at these figures, especially if you're viewing it on mobile. So we'll look at these, but I really what I want to do is I want to pull up full page pictures of them so that we can go through them this way, and then we'll go back to the newsletter at the end because there are a few figures that I'm not going to show here. So this is the Bitcoin dominance, and it goes from 0 to 1. When it's 1, obviously that means it contains the entire market cap of crypto, and then if it were, as you can see it go down, then the dominance is becoming less and less. Now, one of the things you note is there's a general downtrend that it's been in for a long time, except for this speculative bubble that occurred in 2017 and 2018. And you can see that there was something that triggered this move, as well as other things, other moves that were triggered down here. For instance, the move back to the upside. And I've talked about this on TradingView before, but let's go ahead and plot it when we're looking at, say, whether Bitcoin is above the 20-week moving average or below the 20-week moving average. So when Bitcoin's above the 20-week, we're looking at the green data points. When it's below the 20-week, we're looking at the red. And this is one of the reasons right here where I say the 20-week is pretty important. At the end of a speculative bull market, if we break the 20-week like we did during the last market cycle, the party was over. And a lot of people didn't want to believe the party was over, but in fact it was over. And you can see since then, the dominance of Bitcoin, immediately turned around because during this time, altcoins, the rest of the cryptocurrency market, or the asset class, was just dropping in value significantly during this time. And it was after Bitcoin crossed down below the 20-week moving average. So this is when it started moving back up. Then, when Bitcoin got above the 20-week, we know that when Bitcoin gets above the 20-week moving average, it tends to move up in the short term. Not always, especially once you're in this trend line. It's a little bit more arbitrary what happens. But we do know that when Bitcoin gets above the 20-week moving average in the short term, it tends to go up. The price of Bitcoin tends to go up. In this case, not only did the price go up instantly back in 2019, but the dominance also rapidly rose. And it basically came straight back up to the middle of this channel that we were in for 3 years or so before leaving the channel. So we came up halfway. Basically, we came from 0.3 up to around 0.5 when Bitcoin was below the 20-week, and then we came from 0.5 to a little over 0.7, or right around 0.7, once Bitcoin got above the 20-week. And this is not the price of Bitcoin, this is the dominance of Bitcoin. So what can we take away from this? Well, one of the issues is that by only looking at the 20-week, we're obviously leaving out some information. You can't only look at the 20-week. For instance, what triggered this move right here where it shot down? It clearly wasn't the 20-week moving average. Well, because we had basically, except for one data point, we had basically been above the 20-week moving average for over a year. So what happened in the beginning of 2017? Well, let's plot it. But this time, or first, before we do that, this is just like, say, a projection. I drew this in about 5 seconds. In fact, this line here is going to look slightly different than the one in the newsletter, just because I just quickly scribbled it down. So what I would anticipate happening, and clearly I don't really know exactly what's going to happen in the future. The short term is largely irrelevant, but at some point, as we've said, Bitcoin will make a move to $20,000. During that time, the rest of the market will likely sit still and watch what happens. And the dominance during this time is likely going to go up considerably because the rest of the market is people are pouring their money into Bitcoin because it's making the run to $20,000. So this is the move you don't want to miss out on, and is why I say, especially during a bear market / accumulation phase, it's really good to hold some Bitcoin. I mean, this is not financial advice. This is just looking at these markets over the long haul. Now, why do we think that this is going to happen? Well, this move here, you can see we were in the middle of the channel in 2016, early 2017, and it was that move to the prior all-time high of $1,100 where the Bitcoin dominance went from around 0.8 up to 0.87 or so. So this move is very significant when it happens. Now let's go ahead and plot that. So let's go ahead and plot what do the data points show if you color code it based on whether Bitcoin is above its prior all-time high or below it. So we're basically excluding, I mean, this is the end of the 2013 bull market, so we're just saying, okay, it's basically below the prior all-time high, even though there would be some data points that it would be slightly ahead of that all-time high. But let's just ignore this because we only have information at the very end of that bull run. So it's light blue when we're below the prior all-time high. So you can see we were in this window for several years. Basically, right when Bitcoin got above its prior all-time high, this is what triggered this move here. Okay, and we know that it came up to 20K, it dropped, 1100, then it dropped back down, and then it tested it again. And you can see that was right around this point. And then once it confirmed it was above $1,100, this is when the dominance of Bitcoin dropped like a rock, because during this time, coins like Ethereum, XRP, and a lot of other coins were going up, 2,000% or so. And this happened in a very short period of time. And you can see the dominance drop from 0.7 to 0.37 in just a couple months or so. Then what happened? Okay, well, after that happened, these altcoins made their move, and then they consolidated. Then Bitcoin made its second move to 20K, and then we came straight back up, close to the trend line here that you can see. So this move back up, you also don't want to miss, okay? And we're likely going to see the same thing happen again. When Bitcoin gets to its prior all-time high, you're probably going to see a ton of other coins really start to make incredible moves, but that is not going to last forever. And in fact, you don't want to miss the ride that Bitcoin takes that we're expecting from, say, 20K to somewhere around 100K. Now, the exact number is obviously uncertain, but whatever move it makes, you don't want to miss it. And I anticipate after you see a significant drop in the dominance, it will likely rebound over the course of a year or so, where Bitcoin makes its move to $100,000. And then at the very end of this, there's going to be a few weeks where you can you'll likely see a few other coins start to really make significant moves. But this phase only lasts for a few weeks. It's basically like altcoin mania phase, and a lot of people make a lot of money, a lot of people lose a lot of money during this phase, and people spend years waiting for that phase to come again. Even though it only lasts a few weeks, and they spend a long time waiting for it to come again. And during the move back up, people slowly capitulate their altcoin holdings back to either fiat or Bitcoin. And then you get to the point where that last person who's going to finally goes back to Bitcoin, then Bitcoin starts to make the move again, and then it starts the whole cycle over. And so this is basically what I'm anticipating. So you can see here, Bitcoin is still below the prior all-time high because it was above it here, and then I say it's starting below it again because now we're comparing it to the last all-time high of no longer $11,000, which is what this data was compared to. But then once you get to this point, we're comparing it to around $19,500 based on daily data. So, and since that point, we quickly came down during the last altcoin mania that lasted a few weeks into early 2018, and we've since returned to our general downtrend channel. And we talked about how this is nothing more than a speculative bubble, and then we've returned to our mean. Now, what if we combine them? Here, the green is when Bitcoin is above the 20-week, red is when Bitcoin's below it, and then dark blue is above the prior all-time high, and then light blue is below the prior all-time high. And these 2 points for prior all-time highs are smaller so that you can see, if it's above the 20-week and above the prior all-time high, or above the 20-week and below the prior all-time high. So this is what I mean. So you can see the dark blue, being above the prior all-time high is what triggered this run. But no, we were above the 20-week moving average for a long time, and this is why I say we need a long time to spend above the 20-week moving average to give confidence back to the market that that cryptocurrency is alive once again. And once we get back to our prior all-time high, this is, I think, what would trigger another move like this into another speculative bubble that might take a couple of years to complete. So in the short term, we might go up or we might go down, but I do anticipate at some point when Bitcoin makes a move to 20K that wherever we are on the dominance curve, it's going to move up considerably as we make that move. So again, you don't want to miss that. Obviously, you can test the waters yourself and try to get lucky. But for me personally, I do hold a lot of my portfolio in Bitcoin, especially at this time when Bitcoin still hasn't even gotten to its prior all-time high. So this is the move that you're going to want to look out for. Now, some people have a hard time looking at a speculative bubble when it looks like this because it's kind of upside down. You think of it as the metric increasing during this time. So here, instead, let's show altcoin dominance. So you can see our general move up. Smart money's getting in, during this phase. We see the speculative bubble up here. We come back down, and you can see the move down corresponds to Bitcoin getting below the 20-week. It had been above it all this time. It gets below the 20-week. We come down. We have our dead cat bounce, and then we return to the mean. Now, and then here I just drew another theoretical projection as to what might happen. Before I finish here, let me go back to the newsletter because I left one figure out. So if you see this chart, this is the textbook market cycle, or you have your takeoff here, your first sell-off, which is right here, your bear trap in a sense. You can see this was the bear trap. Then it shoots up. You get into your new paradigm shift after you go through, media attention, enthusiasm, greed, delusion. We're at a new paradigm. It goes down. You get denial. And then bull trap, return to normal, dead cat bounce. And then this is our capitulation. And then back into our return to mean. So you can see this is a general uptrend here. This is our general uptrend here, and we've returned to the mean. So we're basically, I anticipate, going to be in this channel. Maybe we pop out of it in the short term, but I anticipate we're, for the most part, in this channel for at least the next 18 months. The reason I say that is because I think it's going to take, approximately that long for Bitcoin to get to its prior all-time high. And sustain it. We might get there before then, but I don't think it would be sustainable. So let's go back and look at some other charts. I just wanted to briefly show, people were talking about Ethereum, the regression lines recently. So these show, our regression bands. This was our baseline here, this bottom blue line, noting that like Bitcoin, maybe each market cycle we drop down a regression line. And so far that seems to be the case, and we may come back down to this level. And I do think we would spend a decent amount of time between, these two levels or even these three levels for the next several years before breaking out up, maybe into this region. So you can also look at it on, say, like the primary regression of Ethereum, and noting that our bottom is around 150. If we were to go there today to the bottom, it would correspond to around $150. And we wouldn't be getting to our fair value of $1,000 until midway through 2023. And I do think that Ethereum might be overvalued by 10x during that time, which is why it would get us to $10,000. So I hope that makes sense. In case you guys missed it, we did a public video on the channel, but this is important. If you already saw the public video, you could disregard this section of the premium video. We're just going to quickly talk about it. It's with regards to the Sharpe ratio, which is used in traditional finance. It was developed a long time ago, but it's a way to determine your risk-adjusted returns. So for every unit of risk that you take on, what is your expected return? And because of that, you can then figure out what your efficient frontier is, or your most optimal weighting balance based on the expected returns and then the volatility of the portfolio that you decide to put together. So this is the Sharpe ratio. If you want to see more discussion on this, go watch the public video. I will be putting public videos discussing the efficient frontier, discussing the Sharpe ratio of different assets and different asset classes, but I'm going to obviously leave the the most juicy parts for the premium list. So I just want to know that you guys know that if you haven't seen the public video, go watch it, and I talk about all this stuff. But note that in general, an acceptable Sharpe ratio is around 1, a very good one is around 2, and an excellent is around 3. For Bitcoin, the current Sharpe ratio, given all historical data, is 3.5, which is considered excellent. Here is the Sharpe ratio for Ethereum, and you can see that it's actually dropped below Bitcoin. So while we do expect the ROI of Ethereum to be greater than Bitcoin, the risk on it is a lot higher. And in fact, if you just look at, say, the Sharpe ratio, which measures your risk reward, at present time, by this definition, Bitcoin is a better bet, because for every unit of risk you take on, you have a certain reward associated with that. And at current time, Bitcoin would be a slightly better, have a slightly better risk reward ratio, because while we think Ethereum is going to outperform Bitcoin, the volatility on Ethereum, especially to the downside, is a lot higher than Bitcoin, therefore the risk is a lot higher. For comparison, here's the S&P 500, which basically just stays around 1. So, it's obviously good to invest in traditional markets. I invest in traditional markets, but the nice thing is there are other asset classes out there, like crypto, where you can actually see a better risk return. Now, here's a 12-month window, and it's positive when Bitcoin is yellow. So when Bitcoin's yellow, it means it's positive. When it's negative, the reason I did this is because it's on a logarithmic scale, and you can't really plot negative data on a logarithmic scale unless you stitch the chart together in a sense. But you can see this is decreasing. You can see our general trend line, which really corresponds to what we've seen before with the primary regression band and taking the percent difference between the primary regression band of Bitcoin and the price. So ultimately, I would expect some move out to here into 2023, where the 12-month window on the Sharpe ratio reaches approximately, say, 2 or 3. For comparison, here's the S&P 500. Again, if you guys want to see, there's a 20-minute video on the channel that talks about all this stuff. But where the most important stuff is going to come in during the second year. So I just finished my first year on YouTube. The second year, we're going to really dive into a lot of more financial stuff, the efficient frontier, how you develop it, expected return versus variance, and looking at various portfolio weightings. So for a given risk level or volatility level, given an expected return, there is an optimal weighting to your portfolio. So what you don't want to do is you don't want to say, okay, my risk level is here, and then choose the portfolio that gives you a very low expected return, because you're taking on a huge level of risk for a very low expected return. If you want to take on this level of risk, then you want to be up here on the efficient frontier, which is, given that risk level, you want to maximize your expected return. So this is what we're going to be looking at over the course of the year and developing this methodology for cryptocurrency. It's obviously been developed for, banks, they spend the better part of their talent on developing the efficient frontier for asset classes, and then talking to other banks and whatnot about this, and then banks will talk to their clients and develop these models so that they can squeeze out profits for a given risk level. So we're going to be applying this to cryptocurrency over the next year. So be sure to tune in for this, because I think this is going to be especially valuable. And we are going to be showing some of it on the public channel, but again, a lot of it will be reserved for the premium list, because I want to continue to to provide value to you guys. I hope this makes sense. So again, obviously go check out the report if you want to hear my thoughts about the market. You can see all the updated risk levels in the Google Sheets document, which you will find in the email, or if you're on Patreon, you'll see it on Patreon. In the Google Sheets document, you'll see the risk levels. They've all been updated for the week. They all changed in like the third decimal place. No big deal. But you can see where we are for all the different assets. Bitcoin is right at around 0.4, which is basically what it was last week, which is also the 30-day moving average of the risk level. So we're in an accumulation phase for sure. Keep this level in mind if you're DCAing this week. You can see Ethereum is basically the same as Bitcoin, but our current risk is 0.39. Our risk last week was also around 0.39, and our 30-day moving average of the risk is 0.39. So still accumulation phase, business as usual. Likely will be accumulation phase for the next 12 to 18 months. So Just stay diligent, stay focused on what your, what the ultimate goal is a few years from now. Don't get discouraged if we drop in the short term. We know that a drop to the 200-week moving average is always on the cards, which for right now, Bitcoin, it would correspond to around $6,000. I'm not saying it has to happen, but we know that that could happen. So if it does, be ready for it, and which is why I always say have money on the sidelines in case something like that happens, because there's always a risk that if you don't have money on the sidelines and it drops to that level, then you can't capitalize on it. So this is the key. It's all about risk management. So I hope you guys enjoyed the video. I hope the discussion on the Bitcoin dominance was useful. I hope looking at the efficient frontier, I hope that's exciting for everyone, and that we can use this this metric to better identify a risk reward level associated with a certain portfolio. So that'll wrap it up for this video. I hope you guys enjoyed it, and I will see you next time. Bye.